You're almost 6'6".
Almost 6'6". So does that mean I'm 6'6"? I don't know.
It does not.
I'm higher than I'm
I
higher.
take away everything.
That takes away any.
That's a good point, right?
Because I got
If you're
nothing.
5'11" and 3/4, it doesn't count as 6, right?
No. So
5'11" don't count as
let's
6.
roll because this is good.
Did I tell you my height theory? I'll tell you my height theory.
Yeah.
Here's my height theory.
I needed this, by the way.
5'5"
Yeah.
to like 5'7". Nobody cares.
Okay.
You're short.
Okay.
We've all accepted us in that category.
Yes.
Okay. 5'7" to 5'9" are the ultimate deniers because 5'7" and 5'9" always say they 6 feet when they not.
Okay. Yeah.
Right?
Yeah.
5'7" says they 5'9". Everybody goes up 2 inches.
Sure.
Right?
Yes.
5'9" say they 6 feet.
Yes.
6 feet, usually 5'10", 5'11", and they be lying. Because nobody is exactly 6 feet.
Yeah, it's
I'm
a fair
6 feet
point.
or that. You lying.
You're
Now, here's where the truth starts to enter because once you get to like 6'1", 6'2", you don't gotta brag. Everybody knows. We
Yeah.
see you.
So
You're
they're
great.
giving you the
We
truth.
see your greatness.
Yes. Do you know about the reverse side of this that I've been
Oh
in my whole life?
I'll be recording.
What's that? Yeah, we are. But
Oh,
yeah.
All right, you're recording? All right. Oh, yeah,
I didn't know there was a reverse side.
there's a reverse side.
Oh.
So I grew up tall my whole life. And like when you're tall and you're the skinniest kid in the world, you can see your heartbeat going through your shirt. You're embarrassed by it, right? And so my whole life, I always went down. Okay.
Really?
So yes. So like for example, I thought I was 6'5". Found out recently I'm 6'5" 3/4. I've always told people I was 6'4". Because there's a thing.
Because it's more acceptable for 6'4".
Well, here's the thing. There's this height. There's the perfect height. Okay. That's your 6 to 6'3" 3/4. You start getting to 6'4". Ooh, that guy's a little tall. You know. You get to 6'2", then you're like, oh, you're a little bit. You're too much of a giant.
Right.
You see what I'm saying? So anyway.
Yeah.
No, that's a thing.
Okay,
So like I go down an inch and a half.
universe.
There's a reverse. There's a reverse.
Oh, so you've been lying about your height and so
Correct.
have
Correct. So
I.
I
We're
got.
brothers. We're brothers. What's going on, everybody? I'm Dan the Realtor. Today, Joe Biden unveils his action plan to boost affordable housing. Is Wells Fargo broke? We got the DMV Real Estate Market Report, the hot or not, and then we jumping into the comment section. Welcome to the Real Estate Wire, folks. What's going on, everybody? I'm Dan the Realtor.
Mortgage Coach Marcus.
And today we got a special guest. We got Latnae from Allied Title. What's going on,
Yes, sir.
Latnae?
What's up, lad?
Fellas? Thanks for having me. Appreciate it.
No doubt.
Yeah,
Hey, I
man.
got a confession,
Yes,
Latnae.
sir.
I don't know your last name. And let me tell you why. I'm going to tell you why. Of course, I got an explanation, right? I'm going to tell you why. I don't know any other Latnaes, so I've never needed
know
to, like,
one.
You don't need
differentiate.
to. Well, first of all, the fact
I
that
don't
you
need
say
to.
my first name correctly is impressive because
Okay.
no one's ever said it. So Latnae is correct. In case Latnae, in case you forget that.
Right,
You know,
your
I spent my
Lat
whole
and your
life
Meade.
doing that. Meade, Latnae Meade.
Me.
M-E-A-D.
Like the Meade notebooks, right? That's
Oh.
M-E-A-D, but we have an E on the end.
Yeah.
Yeah.
So I was one idea I had when I was in 8th grade was do Meade notebooks with the E. I mean, think about the branding I would get. I get all this free branding for the last 100 years.
Oh, you're me with no E.
I'm
He
Meade
with
with
an
an
E.
E. The notebooks is Meade
Without the E.
Without the E.
So they're the lesser Meade.
Correct.
Weak.
I do know Latney. Shout out to Latney
You
Webster.
don't?
I
Who?
do. Latney Webster. He was in middle school with me. Played on the
Really?
basketball team and everything.
But do you still keep in
From
contact
the
with him?
Webster boys down in Gold Vein.
Do you still keep in contact with him? No, that's the question.
No.
Okay,
After
so then he
after
doesn't
middle
count.
school.
You're the only Latnae that counts. So tell us a little bit about your business, Latnae. You're the CEO of Allied Title.
Yes, sir. So title companies, sounds
Yeah.
so fun, right? Now, title's boring, we make it fun. I mean, that's kind of our motto, right?
Y'all
So at the end of the day, I came from the sports and entertainment industry. I used to run obstacle races around the world. If you ever saw the TV show Wipeout on ABC? We partnered with Disney ABC and took a Wipeout run around the world. We had a night race called Electric Run, and then I owned a sport and social club in San Diego. So imagine kickball, dodgeball, any type of sport you can play, and then you go to the bars afterwards. So I sold that company in 2016, moved back to Virginia because my wife's family's here. I'm from Virginia. I grew up in Virginia Beach. And, we thought this was a good little hub between both families. And I was trying to figure out what to do next. So bought a house. I was like, that title process is boring. Like the closing's boring. Whatever. Just not that of an interesting business. Whatever. You got to have it. A friend of mine, Matt Paulson, my current business partner, he had litigated title claims for 5 years and owned a title company in the past. And, we were like, man, this seems like such a boring experience. what I'm seeing is like the other title companies, some of them have websites, none of them have a social media presence, none of them have a really good marketing strategy. There seems like an opportunity here to make this fun, to make it a celebration. If you're buying a house, if you're a buyer, seller, builder, developer, like, let's make this a celebration. Let's make it fun. So that's what we've really been working on the last 6 years. And it seems to be going well. We're in 11 states now. We have 70 employees. And I think we've created a fun environment, and hopefully we'll talk a little bit about that.
Yeah.
What year was it that you jumped in on Allied Title?
Yeah, so we started in 2016 technically, but our first deal actually wasn't until January of 2017. So it hasn't been that long, but it's been a wild ride.
Are you an attorney as well?
I am not an attorney. Okay. So, I think one thing that works well with our company, we have many attorneys on staff. My business partner is an attorney. But my background is more on the marketing. I've owned service businesses my whole life.
And having fun on shows like Wipeout.
Exactly, and having fun.
Yeah. You ever seen that show?
No.
Big red balls.
I like to read books.
These things punch you, land in the water. It's
the
fun.
ultimate
I like to read the
course.
classics. No, I'm just joking. I just sit around watch
YouTube. Do is feel the pain.
Read. Yeah.
All I can do is feel the pain when I watch people like jumping over things and they get hit by something.
No, I've seen like because I know it was based off like a Japanese show, right?
Yeah.
And then they brought it to America.
So that was another one. Yeah, it's Most Extreme Elimination Challenge, and that was the Japanese show where they're all going through these obstacles. And so the concept that we actually started one called Ridiculous Obstacle Challenge.
Okay.
And the inspiration were those two shows, Wipeout and then Most Extreme Elimination. And we put that out, and it was going really well. And then Wipeout actually reached out to us. ABC and Disney were like, "Hey, we see what you're doing. We like it. Would you like to, partner together?"
Most Extreme what?
Elimination Challenge.
Yeah, that sounds like a very Japanese phrase that doesn't translate well. Like it's like probably very short in Japanese, and then when you expand it into English, it's like the most extreme, impossible challenge show that we could ever imagine. Yeah, it's like these long. Yeah, that's cool, man.
Yeah, so I mean, it was in that world, the marketing was really good, the video was really good, and when I got here, I was like, to be honest with you, I was really looking for a boring industry that didn't have great marketing.
Okay, so you could like size it.
That's what I was hoping for. And we just kind of fell into it.
You know what size means?
Of course he does.
Size?
Yes. Apparently, I think you did.
Well, here's a debate. How do you spell size? That's the question, because that's a very DMV.
SICE, I think.
See, he used the context clues, so he understood. But yeah,
he does.
How you spell it? How do you spell it? SICE.
Is that exercise?
I spell it. No, I spell it SYCE.
Size.
Size. Like, because if I need to text it, I want there to be no ambiguity when I'm saying size.
So go ahead and tell them the definition.
Size is just like when you hype. It's like hype. Size.
Gotcha.
Yeah, so
hype it up type.
Yeah. So welcome to Black culture. So when we hear like something like I first started hearing about size when I was in junior high school. So that was maybe like 95.
I was younger than that.
Oh, but it was probably the same age though. It was probably the same year because you're like 5 years older than me. I mean, it's just a factual statement. You're old.
No, I was a young boy, probably like 7, 8 years old.
But what year was it though? Like 95?
No, like 85.
80? You was not 7 years old at 85.
I was born in 77.
You was born in 77?
You look younger than me. I'm 78.
Appreciate
it. Yes, sir.
Yeah, black don't crack.
Unless if you take care of it. Ken Macon.
Ken Macon. Yeah. Well, let's get into...
My babysitter, she used to be like, yo, I'm sicing it. She had Jerry Curl and all that stuff.
Yeah, that's where I first heard it, like sicing. Basically, like if something happens, like say for example, somebody bump into you in the hallway, and then like I bump into you in the hallway, right? Yeah. No, I'll give a better example. Marcus bumps into you in the hallway, right? You just might have been, it was an accident. But then I go, oh, you just gonna let Marcus bump into you like that? Yo! Right, I'm sicing. For no reason.
That's good.
He's just there.
Well, it's funny because like, I've got kids, and my kids are using their own like verbiage.
Yeah, they got their own thing now.
And so they're like, oh man, that's sus, Dad. I go, what?
Yeah.
Sus? I go, what sus mean? Like, suspicious.
Suspicious. Yeah. See, I'm not sure if sice actually has a root word. I think it just came out of sice. I can't imagine that. I don't know a root word for that.
So many DMV words that
it must be like
have
a Latin derivative or something, from the ancient Greek text or something. We pulled it out of the bag. Let's get into the real estate, man. Let's get into the real estate.
Let's do it.
Top real estate headline here. I'm sure probably you guys have heard already by the time this podcast does air Wednesday today.
Yeah.
Biden has unveiled an action to boost affordable housing. Is this a positive or a negative? So I'm going to read this from CNN. basically, the Biden administration has announced an action plan on Monday to boost the supply of affordable housing and rising home prices and overall high inflation. Taken together, the administration officials say that the actions announced will help close the affordable housing gap and ease the burdens of housing costs. And so from my brief understanding of how they're going to actually do this, where they're going to get the money from to do this, is they're basically going to be subsidizing people who have really good credit, and basically having them pay kind of another fee. If you have like a 680 and above, they're going to make you pay another fee, and then they're going to basically use that money to subsidize lower credit, lower income home buyers.
I have a graphic for that. You like charts and graphics.
I do like charts and graphics. So is that good? Is that bad? What say you, Latnae? You're on the leading edge and the pulse of real estate because you're with a title company. Yeah. And for us in the cheap seats that don't know what a title company is, once you reach out to Marcus and we get you pre-approved, you reach out to Dan and we get you a house. We find that house, we put it under contract, and then we send it to Latnae, who is the title company. And what the title company does, I'll let Latnae explain what a title company does, and then I want to hear what you think about this new Biden affordable housing plan.
Sure. So, yeah, I mean, one thing that we see, a lot of times is we're getting the open orders for that past week, right? So we're seeing, a lot of times people are like, oh, there are this many transactions that closed. But we're about 30 days, 45 days ahead of the actual closing. So we have a good idea of where the market's going. And so what happens is we get a double signed contract, ratified contract is what they call it. They send it to us. We open it up. We order a title search. We see if there's liens on the property, taxes that need to be paid, any issues that we need to clear up. And we clear those up over the next 30 days and make sure it's clean property and clean title, clean title on the property.
Your computer's rude, bro.
You're jumping on the conversation.
Come on, girl.
It basically allows people, hey, I now own this property.
Okay.
We make sure that the seller is a real seller, that they actually own the property. There's actually a lot of scams out there right now where there's actually this group of people overseas where they're finding vacant lots and they're going and trying to sell them even though they don't own them. And they've been successful at doing so. I mean, they're making fake IDs.
Wow.
So we need to make sure, because we require IDs.
Right.
Actually goes into another thing, which is actual virtual closings are actually in a sense more secure because they have software to validate if you're the true owner.
Oh.
Whereas if you have a fake ID and you hand it to someone at a table,
right.
So
for us in the cheap seats, what is title? What is a title?
Yeah, so title is you actually own the property, yourself. You have title to the property. And so...
But what is a title? What does that mean?
Yeah, it basically means you are the official owner of the property.
So it's like a piece of paper?
Yeah, exactly.
Okay, so if I own a car, my name is on there for a 1996 Honda Accord, and it's got my name under there, and it's my ownership certificate.
Exactly.
Before a house.
Yes. And so we're just making, sometimes people are selling homes they don't own, and there's different scams like that. That's why you get title insurance.
Yeah, I saw something like that. This black couple, they were raking it in. They were cranking, and they would just go, it was in Texas or something like that, and they would just look at vacant houses, and then they were racking up, man.
Yeah, they're selling. It's frightening. It's scary, but that's why you get title insurance. Your lender is going to require that you buy title insurance for them, and then you as the homeowner have the right if you want your own title policy.
So why do we need title insurance?
So it's a good question. So just like I said before, we do our best, to make sure everything's clean and clear. There is fraud that occurs out there.
Okay.
And there's fraud that technically, might trick someone. Whether they're bringing a fake ID to the table and they don't own the house, and we do everything we can to check it. And so, there's also mistakes that happen. So let's say the recording office, which, we're not in charge of, we send everything in for record. But if they spell something wrong, they have, here's an example too. Let's say you have 4 kids, you pass away, one of your kids is in Australia, and the other 3 are here. That person in Australia never gets put on the deed and isn't put on the title and everything. Eventually, that house is sold. This person from Australia comes back and says, "Hi, I own one quarter of your house."
Oh, right.
So you're protected in senses like that.
So I bought the house. Now I own it. I moved my wife and my family, and then some random guy from Australia comes in and tries to take a ownership claim in my property.
Exactly.
Then I can say, well, I have title insurance.
Yep.
And that title insurance is going to pay that person.
Exactly.
And they can go back to Australia where they came from.
Exactly. So that's what title insurance is for.
No hate on Australia, by the way.
Yeah, boundary line issues with neighbors. So like, oh, there's a shed on my property. That needs to be torn down. Like, title insurance covers, enhanced policies.
Oh, does it?
Cover on insurance boundary lines issues. So
I'm glad you said that because like when I give quotes for borrowers, there's always an option for enhanced or basic.
Yeah.
And then the other caveat to that is the owner's coverage, right? And you gave the example about the house. When I bought land, I bought insurance owner's coverage because and you can only get it at the time or never at all, right? Is that
you
true?
Technically can get it after, but no one really ever does. So I mean, you could come to us and say, "Hey, I never bought it. I would like to get it." We could do that, but I mean, that never happens.
Dropping secrets.
Yeah. So what are your thoughts on this affordable housing plan that Biden has created?
Yeah, I mean, look, at the end of the day, that's more probably a developer's question, I would say, to a degree. How does it affect developers? I don't get into that. I mean, I think it's a good thing. I think at the end of the day, prices continue to increase and go up, and it's not affordable for people. So I think the programs make sense. Absolutely. And I'm, Brian Athey was on recently. He's a developer. I know he's working on a lot of programs like that because, he's not just trying to make money. He's trying to do good. And, overall, I think the concept makes a lot of sense.
Yeah.
I don't personally, in my business, doesn't get in the weeds on that type of thing, whether that's good or bad. We're just looking to create amazing experience for whoever's buying.
Yeah.
That's kind of what we're focused on.
Let me give you a couple hints on this thing. So typically you think that the more money you put down, the cheaper your interest rate would be. And we were talking about the price adjustments and someone, we were talking about before about LLPAs, which is lower level price adjustments. Mm-hmm. So good credit, 20% down payment. You don't have any of that mortgage insurance, but then you also minimize the risk on the side of a lender, right?
And the mortgage insurance again for us in the cheap seat?
Mortgage insurance is the insurance policy that we as lenders take out to make sure that if you default on your mortgage, we get all our money back. But we don't pay the policy. You pay the policy and it's part of your mortgage
policy premium.
Policy premium.
Okay.
Is that still like 20% so you don't have to do it, or is that changed at all?
If you put down 20%, there's no PMI at all. For conventional. FHA, you have 20% regardless. Yeah. USDA.
It can be extra like $200 or $300 a month sometimes.
Depending on your loan amount, yeah. So what they've done with these affordable, trying to make home ownership more affordable for consumers, but they've changed it so that what they're saying is that typically, if you put down 20%, you have good credit, there's an adjustment of 0.75%, right? So this is built into your interest rates. But now, if you put down 5%, it's not, you would think I'm not putting down as much, so my risk is higher, right? Mm-hmm. No. Now what they've done is they're saying, okay, instead of charging you 0.75 like somebody that's putting down 20%, we're only going to charge you 0.25. So a quarter. Mm-hmm. So your rate can be better and lower if you put down 5% with good credit than it can be if you put down 20% in good credit.
Okay, so
which is opposite of the way it used to be.
Okay, so they're basically making it like if you put 5% down, it's basically the same as if you put 20% down.
It can be better,
or even better than if you put 20% down. It can be better
in terms of the interest rates.
That's why I think this is a very, very, very bad thing. I think this is a very, very, very bad thing.
Because you think it increases the risk?
There's already low inventory. Now you got a lot more buyers coming to the market. It's going to be harder to buy a house.
It's going to be harder to buy a house. More people are going to be jumping in the market, which is just going to.
Oh, you're saying it's bad from that perspective?
I think it's bad for everybody all the way around. I haven't really seen too many things. This isn't a political show, but I haven't really seen too many good things that Biden's done thus far with the economy. And so I think this is just another thing that he's doing. Where if it were me and I were president, vote Dan Wheeler for president, by the way, 2024. If it were me, I would just stop spending so much freaking money, right? Stop blowing so much money into the economy, and then that would also reduce the inflation because we wouldn't have so few dollars chasing so many goods and services. Because if you just keep blowing money, giving people free money, well, they're going to keep spending that money on an already limited supply, which is going to push the prices up. And add to that now, if you remember, which I vaguely remember, but I read a lot about what happened during the Great Recession, which was subprime mortgages, where basically they were given people who shouldn't have had loans, who were not qualified, who did not have. And long story short, if you want to buy a house, you got to have money saved up, and you got to have good credit. Mm-hmm. There's not really too many shortcuts in life, and we saw what happened the last time we took shortcuts. We gave people ninja loans. no income, no job verification.
Yeah.
And then we gave them these adjustable rate mortgages so they could get in at a lower interest rate, so they could get in.
Negam too. Remember that?
Which one was that? Which one was that? Negam.
You ain't never heard of
Negam
negative loan?
Nah, that sounds like a borderline racial
your
slur.
rate-
What's that?
What is it? Your rate goes up? Is that what it was? That you
No,
pay
negative
less than you owe?
negative amortization. Think of it this way:
Mm.
you have 4 payment options. You have your 30-year fixed payment. You have your 15-year. This is one loan now. You have 4 payment options: 30-year fixed payment, a 15-year fixed payment, an interest-only payment,
Ooh.
and then you have a minimum payment.
And when does that turn?
The minimum payment.
Mm.
This is where the negative amortization comes in, because when you have your minimum payment might be $1,000.
Mhm.
If you pay it, you don't get a late on your credit report, but you're not covering the principal and the interest.
Whoa.
So the difference between in your principal and interest might be
Yeah,
$2,500.
Right.
So that's $1,500 being added to your balance because
Your
you got to
loan
pay
is
it.
increasing, right?
Your loan
And
is
so that's the negative, because amortization. Explain amortization to me. That's
amortization is basically the time frame for which your payment is spread out over.
Got it. So like 30 years, 15 years, amortization. That's when it dies, essentially, right?
Right.
Your mortgage means
30-year
that.
fix is a 30-year amortization, so you pay it over 30
And
years.
so that negative amortization said basically you can just pay the interest, and we're just going to throw the rest of this on the back of your loan.
You're not even paying the interest. You're not even, your
I mean, there's a minimum
your
payment.
minimum payment is not even
Oh my
covering the
God.
interest.
And they created these, but they don't even have those anymore, right?
No.
That
And
was,
so-
that was part of the Great
Yeah.
Recession, right?
Dude, I think a lot of these
And it was a
little
short-term
programs-
loan. It was like a 3-year or 5-year arm.
Dude, and that's so I see this happening again, where it's kind of like people do things for political points so that they can get like reelected and maintain power at the expense of working class folk like us three that are
Yeah.
just regular folks, and they put it under the guise of, well, we're trying to do affordable housing, but really what they want is this, in my opinion, to buy votes, right? So they put this affordable housing plan out to supposedly help affordable, people who need affordable housing. But in my opinion, everybody shouldn't have a house. It takes a lot. It's a lot of. I don't think everybody should have a car. You know what I'm saying? Because there's a certain level of responsibility.
I'm gonna say the
You need to have enough money, to fix stuff, and even if you have a home warranty, to pay your mortgage, and then still be able to go back and forth to work and still pay gas. So I think it punishes people with good credit, because now you have to pay like $40 extra per 1,000 or something like that. I have to get the specific numbers. So they're subsidizing good credit people to pay for bad credit people.
Yeah, so I didn't know the details. So I mean, if you're getting bad credit people, that I would agree that's a concern. People that don't have good credit, that haven't proved they're going to pay their bills, like, seems dangerous.
To me, it's kind of a scary thing. I think if it were me, from my approach, I would say let's create an environment where we can get lower housing prices, and we can entice people to put their properties on the market, because we can lower it. Like we were talking earlier, Latnae, about the incoming recession. If there's a recession, like, is that what are your thoughts on the recession and where the economy is going in general?
Yeah, I mean, the way I look at our business and kind of the recession in the market right now is, we've had a decent last 10 weeks, right? We're in the spring market, so we better, because we have 70 employees. We're in 11 states now, and so we want to keep everyone employed. And it was ugly there for about 8 months. We had an ugly 8 months, 6 to 8 months. We're just trying to survive it.
The prior 8 months?
Yeah, the prior, because you got you're going from 2.5% interest rate to 7%, and things just halted. And the truth is, transactions were down over 50%. We're in the transaction business, so like I don't care really. I mean, yeah, sure, we make a little more money if the prices are higher, but we're looking for transactions, right? And so that's what's fearful for us. The good news is that the spring has been nice. I would call it's been good. We've been seeing a good 10 weeks of opens. And I'm looking at opens on a daily basis, but really the way we talk about our business is how many opens do we have last week.
When you say opens, what do you mean?
I say open orders. So that meaning a ratified contract.
So people starting the open escrow process.
Yeah, they've opened up escrow, and they're going to close sometime in the next 30 to 45 days. Exactly.
I've never heard that term, but
so that's kind of what we look at.
We're in the cheap seats, brother.
The thing that's weird about right now is, I really think it's just interest rate driven. We'll see a good week, and for us, our best week ever is 100 open escrows for a week, right? So that's 100 houses purchased. We saw that about 3 weeks ago, and but then what's weird, the next week it was 65, and I haven't seen the amount of jumps we're seeing from week to week, and I don't know if it's like, hey, SVB occurred, interest rates went down a little bit. All right, let's jump in, let's put an offer in, and maybe it takes them about a week or two to do that. So everything's a little delayed. But that's the kind of stuff we're looking at right now. And as we look forward, when I look at Q3, Q4, you got people locked in at 2.5% to 3%. Those people are not selling their house when interest rates are 6 to 7.
Mm-hmm.
So what is that interest rate we need to get to where people are willing to make a move? And I don't know that answer. I've heard people be like, low 5s maybe. Are people willing to trade up or do it? We'll see. Yeah. So, as we look at things, for us, we're kind of like, hey, we got to survive high interest rate environment. We got to be smart. We got to be efficient. We got to keep our costs low. And so really it comes down to what's going to get the interest rates to go lower. And, I thought SVB might do that whole situation. A recession will do that.
Mm-hmm. I think that's what we were talking about, right? Yeah. Like a recession is not a bad thing at all.
I mean,
that means
I think it's a necessary thing.
Yeah. It sucks for some people.
Yeah.
So do I hear y'all saying that it's time for a recession?
It seems like I think we're almost there.
We're due.
I
think we're already in one, Latnae.
Yeah, but based on the reports, and the traditional definition of it, yes, we are. But like to where it's like official, when things actually happen.
Now we're getting political again.
I'm just saying. Do you
when
think
do they call it?
Whenever they call it, but do you think? I'm saying like whenever they call it, do you think from what I'm hearing you say and what I've heard you say, like it's kind of it's probably time for them to be like, yo, we're in the recession, and then whatever starts to happen, and when they say we're in the pandemic, then whatever happens. We're out of the pandemic now. You can take your mask, whatever. You like, sure. It's like the official announcement type of thing. Are you saying that it's time for that?
What do you think, Latnae?
I think it's time. I think we've been on a massive bull run for so many years. Obviously, the market struggled and there's been a pandemic, but even during the pandemic, housing prices went crazy. Yeah. I think we're close. I hear news all the time of people that are like, oh, we laid off this, we're laying off more people. Yeah. Even when I look at the commercial space, I know a lot of business owners and they're like, I'm not renewing my lease. I'm not, that's way too costly. That's an interesting market, that commercial market. Where does that eventually go to?
Yeah, we were talking about that last podcast. I did a video about it, which I think I'm seeing a lot of commercial spaces converting into residential, and rentals. Actually, rentals, not even condos.
I love that idea. You remember I was talking about?
I'm not a fan of that, man.
Well, you remember I was talking about the barracks in my neighborhood. Somehow I don't know what Tiff was looking at, but she said that she saw the article within our county newspaper or online or whatever that they are actually converting them. You got you go in studio apartments, 1 bedroom, 1 bath,
but that's type of stuff because they could easily turn them into condos and alleviate some of the inventory problems that we have, but they're not. They're turning them into rentals.
Well, you might remember, but there was a lot of condo conversions. You remember that?
They used to be.
Back in the day,
they was cranking them out, but it's kind of dried up a little bit.
It's been a tough market selling condos last couple of years.
Because people don't want to live in condos. It's hard to sell them. It's hard to get rid of them.
Condo fees.
Yep.
But that thing
condo fees.
we always shame condo fees here on the show. But I think that there's also an element of like, if you can reduce, you can keep your amenities or whatever the same, or make it attractive in certain areas, but then reduce the amount of maintenance. Because people don't have families that are as large as they used to be, and then people want to be as flexible with mobility and also have everything kind of right at your fingertips. And you see, your mixed use properties. I think it's a good opportunity. Like you said, you're a shifter, right? So I feel like you saw the space where title companies were boring, and now you need to come in and bring that wipeout mentality and this excitement to the whole thing. And I think there's also the element of like, if we bring it all the way back around, I think the element of commercial spaces being vacant, they can be converted, and we have a shortage of housing. Then convert this to housing.
That seems to make a lot of sense. There was an article this week.
Marcus Fields for president 2024. I'm running against Dan.
I think that makes a ton of sense.
My opponent is a liar.
There was an article this week, though, that said the issue, and I'm not a developer, but the issue with the commercial spaces is they're not structured for rentals. Like, it's almost like you got to tear the building down and build it up again. Oh. Because, you got weird layouts with commercial spaces. Not with that, because they're like, the plumbing's different, like you got even the bones.
Oh, yeah.
And I don't know that business. Maybe
if you can get a good deal on a vacant building, maybe banks will lend to you, which I think leads us into Coach's Corner regarding banks. We gotta. You see that segue, Latnae?
I like how you do it.
So what you got for us in the Coach's Corner regarding the most recent update with our favorite bank, Wells Fargo?
Yeah, Wells Fargo has not been the favorite to A lot of communities.
Show.
And they continue to pay out billions of dollars in fines and fees and things like that.
Which community are you talking about, Marcus?
Well, the ones that look like me and you and other people, Latnae too. But basically, they just finalized a sale of $50 billion with a B, $50 billion sale. They're selling their mortgage servicing rights. Now, I'm not selling something if I don't see the benefit and or if I don't need the money. It's one or two, right? But the deal is expected to close later this year. But basically, it's a servicing right package. So it says that they confirmed the sale during the first quarter earnings. They'll continue to explore opportunities to simplify and reduce the size of their servicing business. It said it was conducted through an open auction with pre-qualified bidders. So if we're talking about an open auction, pre-qualified, but they basically said pre-qualified, you need to show me that you have $50 billion to spend because I got a $50 billion. I need some money.
Yeah.
Wow.
That's what it sounds like to me. And I think they need some money because you have these people are leaving the banks and going to maybe the smaller community banks. You add that to they can't keep paying these billions of dollars of fees out, right? And then on top of that, you say, well, my clients that I do have are not really buying our products as much because there's a number of people out here that are offering a little bit more flexibility in our products. Like they're just not in a good situation. Probably the greatest asset is that they are a nationwide bank, so they've got a lot of brick and mortar. Yeah, they got a lot of brick and mortar, a huge presence. But when you got to sell off something for $50 billion, that says something to me.
So what does that mean for like people who have Wells Fargo like mortgages, their loans at Wells Fargo?
That means that you would probably look out, and they're not going to sell all of their servicing, but I would assume, but whoever you're making your payment to, that person is going to change. So the terms won't.
Mortgage servicing, can you explain that for the cheap seat guys?
It's just somebody who's taking care of you make a phone call, hey, I need to make my payment, or hey, I got this bill in the mail. You know, so whoever you're calling at the 800 number, it's the service.
So basically, I'm a buyer. I get my loan through you, Marcus Fields Mortgage Group. And then we close on the property, you take a picture with Dan Willis Homes at Allied Title.
Yep.
Then their loan gets sold.
It can get sold.
To many times, right, like within the first month.
Within the first month. Like you make your first payment to Fields Mortgage Group, and then it gets sold to a mortgage service.
Package it up and send it out to...
Okay. And then that's where you actually pay. So it's not the original loan originator?
Some companies, let's say Wells Fargo, Navy Federal, Bank of America, when you do that loan through them and with their loan officer, they'll service.
Okay. And that's the online platform where you go to actually pay your mortgage.
Right.
That's the mortgage servicer.
Right.
It is interesting. Like, why are they getting out of that?
That's
is that really like what's the risk with them servicing? You know, like it seems like it'd be a problem.
That's where you make your money.
There's not a ton to do there. You're just making hey, here's your bill, pay it. Oh, I got to track you down. You didn't pay, right? So like that's interesting that they're getting rid of it.
Absolutely. Because that's what if you look at the life of the loan. So if someone keeps their mortgage, a $300,000 mortgage, over an estimated 30-year time frame, over those 30 years they will have paid, depending on the rate, $600,000, $650,000, something like that in total payments, right? Because of the interest that's being accrued. Well, who's collecting the interest? The servicing department is collecting the interest. So they're making money off of this because they got to do some work on your behalf.
So they're selling that to get more cash. Just, there is more risk out there. Yeah, all that kind of stuff. Well, it's interesting, though, because one thing I've heard, and I just read an article on the way here that said that it's harder to get, loans now. It's harder to get credit. It's the worst credit environment, small businesses have seen in a while, and so I will say from just some people I've talked to that there is a lot of risk on the smaller banks because, I'm in this networking group, YPO, and I'm in this group and they're like, hey, we're taking our money out of the small banks and going to the big ones because our belief is, the Fed, the government's always going to make sure Bank of America or Wells or whatever is in good shape. So it'll be interesting to see how does that affect the smaller banks, and if depositors are taking money out of the smaller banks, they can't lend as much. And so that's, I think, one issue right now from the lending side for small businesses. But, it's a good question. Why is Wells Fargo doing it? Do they need more cash because they're scared of the environment? Yeah, I don't know.
Yeah, I mean, these big boys, they're one of the big ones.
Yeah. Well,
they see some things we don't sometimes.
Well, that's good. Let's get into the DMV market report.
Let's rock and roll.
So what we got for the DC metro area? And then I got a really burning question for you, Latnae. So juicy. So juicy. All right, so here we go. New listings in the DMV for March 2023. We are up from this time last month. We have 42.9% increase in the number of new listings from this time last month in February. We're down from this time last year, 35%. So we're down from last year, but we're up from this time last month, almost 50%. So more properties are hitting the market from February to March. New pendings, again, up 28%. New pendings means somebody has it under contract. They're at Latnae's office right now. They're with Ally Title and they're working on the title work as we speak, up 28% from this time last month. And closed sales are up 31% from this time last month. And so we're seeing the market moving. In addition to that, which if you're looking to buy, this is a number that's going to concern you. The median sold price is up 1.9%
From last week?
from last month.
Okay.
We're up 1%. So if you were
For
the average
1.9.
sale, the median sales price was $545,000. Last week it was $540. Last month it was $540,000, up $5,000.
Okay.
And so that's good.
I mean, well, I'm seeing it's back to the seller's market in the spring, I would assume.
Yeah.
I'm hearing
We never left. We
offers.
never left
Yeah.
a sellers. We haven't been.
We
in a
had a little
market.
buyer activity.
Do we
for,
have it in like December?
like 90
I mean,
days?
It was so slow in December.
And it was still,
January.
but it was still technically because
Yeah.
we not only did we have lower buyer activity, we also had lower listings, so it kept
Yeah.
evening out.
No, that's interesting. I would always wonder, we were talking about condos, like it's so hard to get the single family. Will people just be like, screw it, I give up trying to find it, I'm going to find an awesome condo? Like that never, I don't know. Has that
It's happened.
at all?
It's happened. We did a show about that
Yeah, yeah.
article
Yeah.
where people are. I mean, especially if you're trying to get in something and your price point, condos are a good option for a lot of people.
You know, I find funny. I've got a couple clients now that they understand the rates. They've adjusted to the rates. They've understood the pace of the market, and they understand that inventory is an issue. And man, they're like, man, forget it. If everybody is in here wrestling for a deal, I'll jump in and wrestle for it. So some people have said, I want to start off with a townhome, but then they're like, I like the single family too. So let me see what's up with that one. And now even understanding that one client in particular, she understands. It's listed at $450, and it's an open house this weekend.
Yeah.
She hasn't even talked to her realtor. She's like, I'd offer $465. So she's already thinking I got to come up.
Sure.
You know what I mean? And she was already like, at first she was at 400,000. Then we couldn't get what she wanted at 400. Moved to 450. Now she's like willing to go even higher. So I'm like, all right, well, cool. So I think that's the matter of the people understanding the market. It comes from us educating, and getting the right information from the right sources, because mom and them don't know.
Yeah, and a lot of times, I mean, even CNN, a lot of these headlines and stuff that tell you the market's like this and that. But when they actually look at the boots on the ground, it's like, actually, it's not
like that.
what you think it is. It's still a seller's market, and you still got to compete.
We see that a lot, that the news cycle is just behind.
Yeah.
It's delayed. It's just not accurate. You know, like.
It's never positive.
And that's the good thing about being entitled, too, is we see those indicators real quick. And I mean, it's interesting when I look at the market, I go back to it with like, how do you get, who's listing? Who's listing at the 6? And I guess they're listing because you can get,
people
you're still getting great
list
prices.
Yeah, people who are listing now are people that got to sell.
Yeah.
They call it the five Ds, right? Pause. They got divorce, death, dollars, diapers, and then there's one other D: divorce, death, diapers, dollars, downsizing.
Oh, okay.
Yeah.
So you got a house that's too big, you need to downsize. Diapers, you got a baby. Dollars, you got a new job. Divorce, self-explanatory, right? So it's kind of like those are most people, not just like the people that I saw buy over the last 2 years were people who were just taking advantage of an opportunity.
Yeah, that's what we're not seeing anymore, is taking advantage of opportunities much. If those people are going to go buy. But maybe some people are like, because they are getting high prices right now, they're, hey, I'm going to rent for a little while.
For sure.
And then that makes
And
sense.
it's very neighborhood by neighborhood, market by market, and even block by block in some cases, because some people, like we was talking to the address last week, they're still getting multiple offers. And then like some properties that I put on the market, because I'm more listing heavy, they go right away.
Mhm.
And then other joints I got been sitting on the market for 42, 60 days. You know,
No, I hear you. The good thing we have in the DMV is I'm in a mastermind group of title company owners across the country.
oh
And
cool.
we jump on once a month and we talk about what they're seeing. And I feel like we just had one this week. I feel like we have the strongest market, one of the strongest in the country. In terms of just transactions.
I agree.
And I just saw something. Was it last night or whatever? That all the numbers are down on the West Coast. It was, and the map was red. I mean, clearly on the coast, and even extended it to like maybe even Colorado. But then everything from like Illinois on to the East Coast was all green.
Yep.
And you said some small increases, but the closer you got to us, the numbers kept going up, and I was like, oh,
yeah. And I mean, time will tell if that means that. I think
go
you
red.
brought it up. If it's like a wave starting on the West Coast coming over to the East Coast, or if that's indicative of their ridiculously high prices. And I mean, you got to admit the fact that there's a huge, and what nobody's really talking about is the great flight that's happening in California. Like people leaving California, a lot of people leaving the West Coast and San Francisco just turning to bedlam. Chicago, people are leaving those places and going to other states.
Yep,
that is true.
So
it's happening in the I used to live there in San Diego. It's happening in the masses. I mean,
Really?
It's crazy. There's people going to Texas or Nevada. I mean, you don't have state tax. It's a big deal.
Yeah.
I mean, everyone always said that when I was out there. Oh, people are going to leave, and no one ever did.
Mm-hmm.
But things changed.
Yeah.
When COVID occurred, and it created that spark.
Yeah.
I wonder if states that don't have state taxes see the influx of people coming. Whatever changed that.
Florida, Delaware.
You know what I mean? Like
Arizona.
Yeah, Arizona too.
They don't got no state tax, right? Or is it Texas?
I think you're right. And I know Texas doesn't. Florida,
Texas, Florida.
I think here.
Yeah. Well, that actually leads us to a very relevant topic, which is the real estate hot
or not.
So we're going to do a little bit of would you rather, and then I'm going to ask you this burning question that I got for you, Latnae, and then we're going to let you go, get on the road here. So first, would you rather? You just got to go. Like you just got to like top of the dome. No thinking.
Hey, they don't let me practice on this one. It's just pure. Let's see what happens.
No, here we go.
For sure.
This is going to tell us the real you, deep down inside. Would you rather that aliens that make first contact be robotic or organic? Aliens that make first contact, robotic or organic? Because
then you can convince them to not kill you. Robotic, they've already got their laws and rules. They're going to do what they want to do. We might be able to influence.
Organic.
Yeah. I'll go with robotic. Just to be a contrarian. I feel like we could figure out some type of EMP, electromagnetic pulse. Maybe we could shut them all down. Organic, I feel like if they're intelligent enough to get here, they came here for a reason, and they're probably not going to be very persuadable.
Fair point.
If I see an anthill over there, I'm knocking it down if I'm trying to build a house over there.
You're a great salesman, though. So the problem is you're sitting there and you're talking to a robot. It's like, I don't care what this guy says. My rules are bringing him up in the ship, and we're going.
But that's when I pull my EMP out and just like and just shut him down.
Y'all see that UFO that flew by the pilot?
I did.
I don't know if
was that fact or cap.
I don't know.
I think it's fact.
I'm watching a show right now on UFOs, but I can't remember the name of it.
Was it UFOs?
I never believed. I never believed in them before, and maybe
ancient aliens. You an ancient alien guy?
It's an actual like Netflix series. It's fiction.
Oh, it's fiction.
It's like a series. I'm just going blank.
Invasion.
It's not Invasion.
I watch all of them, bro. I love all the alien space stuff. I be sitting around watching like hour and a half documentaries on YouTube about like the what do they call that? The end of the observable universe, where there's like this like the depth, the distance that our telescopes can actually see, and then there's this like black void, and then we can see like there's like a infrared what do they call that? A back level of radiation, basically, that we can see. Like that's as far as we can see, like this little this like radiation burst. So we're trying to figure out like what's beyond the radiation burst. And it's
Did you see 60 Minutes last week? I think it's the Webb telescope. They just put it up there, and all the new stuff they're getting, all the galaxies out there,
and the exoplanets
they've never seen before. Yeah,
they got like planets that like rain like glass horizontally at like 450 miles an hour, and it's just like a tornado of glass and it's just. All these different planets, bro. It's so many. They got a bunch of different like Earth-like planets that it's great. They got a water planet, like Water World. It's really like Water World and stuff. It's getting funny out here, man.
No,
Would you rather?
It's not getting funny. It means it's always been funny.
I mean, it's funny to us, but not funny to the glass planet. To the glass people.
Anybody on that?
Would you rather lose the ability to read or lose the ability to speak?
Oh, boy.
So for me, this is an easy one because I just don't read. So I go audiobooks.
Oh yeah.
And I've never liked reading. It's bad. But I still, luckily, audiobooks came out. I love audiobooks. I listen to them constantly.
Lifesaver.
Podcasts.
Yeah.
So I'm getting the education, but just never. It was one of those things. The mom always was telling me to read.
Yeah.
So I fought against it. Never got over it.
We blame your mother. What say you, Coach?
I don't like either one, but I'll go with.
You don't
read.
like reading or speaking?
No. I don't like the idea of not being able to read or also not be able to speak. But I would say probably read.
Yeah, I'm gonna go with read. I talk too much. If you hadn't noticed, would you rather be covered in fur or covered in scales? What say you, Coach? I'm gonna go with you first this time. Take away your ability to think.
Let's go fur because covered in scales. That means you're cold blooded.
I like the fur. I like the fact I want to keep the fur. It's gonna be useful in the winter.
Mm-hmm.
I'm so scared of snakes still.
Yeah,
I never got over it.
Snakes are weird,
My
bro.
kids picking them up.
What?
I'm like, oh yeah, we went like
They have no fear,
Colorado
bro.
Rivers, running, picking them up. I'm like, how do you know that's not poisonous?
My kid picked up a stink bug today. He's like, Papa. I'm like, give me that stink bug, boy. We don't eat stink bug. He's like, caca. He calls every animal caca. So, like, if it's a dog, a cat, a bird, it's a caca. So he picks up the caca. It's like a bug. He's like, caca. I'm like, dude. Let Poppy see the caca. Last one. Would you rather always be? I'm gonna ask you this one. Would you rather have a real get out of jail free card or a key that opens any door? What say you, Latnae?
I'm gonna go get out of jail. I mean, yeah, it might be cool to check out some houses here or there, whatever, but not that much interest. I mean, but yeah, to get out of jail, it'd be a good thing to have.
Give me the key. Give me the key.
The key to any door?
Any door. I ain't going to jail. I ain't built for it.
Okay, yeah. I mean, I guess if you had a key to any door, you could just get out of jail.
But trying to get out of jail, you're going to get shot.
Hey, I was looking at that get out of jail card as, also maybe I'm misinterpreting, but like, hey, honey, I'm going on a boys trip to Scotland to golf, and I'm going to not get in trouble for this.
Oh, you mean get out of jail like with your wife?
Yeah. That's
you took it to another level.
That's what we're doing.
I'll take the get out of jail free card because, I got a temper sometime, and if it goes down in the streets, I don't back down.
Oh, okay.
And I ain't going back.
You're thugging out here in these real estate streets.
I'm a thug. A 5'5" thug. Actually, I'm 5'6", but, who cares? Who's counting, right? All right, let's get to the last question here, Latnae. And actually, we always ask our guests the same question, but I want to ask you a different question. And this was...
Is this the burning question?
This is the burning question.
Okay.
So, one of my guests was talking... I usually ask this question, but I want to elaborate and get your answer to the answer that he gave, which was the typical question that I ask is, where do you see real estate agents and the role of real estate agents in the next 20 years? Mm-hmm. And one of my guests said, with regards to title, and, a lot of people are going to be losing their jobs over the next 30, 50 years just due to AI and automation. We're already seeing it. And so they were mentioning smart contracts and title companies being basically reduced because these smart contracts are going to eliminate the need for title companies or some title companies, and people are going to be able to do a lot of that stuff doing smart contracts. So what say you with regards to that over the next 20 years?
I like it. In fact, it's funny because I just had a conversation yesterday randomly about real estate agents 20 years from now. Which is odd. So I'm going to answer both of them. How's that sound?
Good.
So I'll start with the agent. So I was in San Diego 2001. Company comes out, a brokerage comes out. We list for 1%. And everyone's like, oh, man, agents are screwed, right? And that company went out of business. And still, 20 years later, you're still selling for, I don't know, 2.5%, 3% aside, which is shocking to a degree. Yeah, there's Redfin that's listing at 1%, but it's not
They're
like
listening
it's
at 4%. They're not listening at 1%.
They're
liars.
Aside,
Right.
But no, fair point, right? So you're still seeing whatever that number is, 5-6% listing fees overall on both sides combined. And, real estate has grown a lot over the last few years. Agents have done very well. I was talking to this guy heads up like compliance for the industry, for the real estate industry. And he was saying, and he actually said that he goes 20 years from now, real estate will still be done the same way on the agent side. So it's interesting because there is a side that says, hey, there's great technology out there. You can look at the house online. You can do whatever. Well, every developer I know still hires a real estate agent to sell their house. I haven't seen developers, I'm going to go and try to save money and not do it, let's say, the right way. So I find that to be interesting that 20 years ago, I was like, oh, it's going to go away. Well, we have all that technology now. We have Zillow, we have Redfin, we have these companies, and there's still agents who are very busy, in my opinion. Now, transactions are down right now, but that's not because agents are bad or whatever. That's because of interest rates. So on the title side of things, I think that, people have been saying, hey, there's blockchain. You guys are going to be out of business. So one side of it is to get all the homes on a blockchain, transactions have to occur. It's going to take decades. All right, that's going to take a long time for that to happen. So that's one thing. Now, maybe there's a way they can get them on blockchains without transactions and stuff. But at the end of the day, if you see the amount of communication and phone calls we get on a daily basis, like how many times are you emailing back and forth with whether it's the title company or whoever's handling what? In California, they actually split up title and escrow separately. So title is done by title companies, and the only thing the escrow company does is, and this is a big thing, is they're making sure that money is getting sent to the right person. They're paying off mortgages. That is a massive amount of responsibility, and I don't see that being automated. In the sense, like, I feel like you need to have people clear up title. You need to have people, that are in charge of money. You need to have people that are creating a great closing experience. You come in our offices, we have beer on tap, coffee on tap, ping pong tables, arcade games, music. Vibe and experiences will always matter. And so that's a big part of what we do too. So now, will it come down that we do less title work one day, feasibly? Maybe it's automated more, maybe there's blockchain, but there's still going to be a service component to the closing experience. And there's going to be a service component to making sure monies are sent the right way. And, look, there's things that happen after closing, like, hey, that water bill needs to be paid off. And this, so there's a lot of communication in our job. A lot of people don't know that because we're kind of in the back end. And so, I think AI will always have a role. We're seeing it right now. If someone reaches out to us, hey, I'd like to get wire instructions. Technically, we can create an AI program. Hey, thanks. Or if someone sends an email like, hey, here's a ratified contract. With the technology today, AI could open that file. They could send out an email. Congratulations. Here's how you send out your wire. There's definitely efficiencies. There's definitely a case you could eliminate workers here and there. I think you're going to have that happen in every industry with AI to a degree. But, with AI, we're looking at as a component to make ourselves more efficient. And to make ourselves, better at what we do. So,
but somebody still got to press the button at the end of the day.
They got to press the button.
Somebody got to hit enter.
The amount of phone calls we receive from real estate agents, hey, this is my situation. I'd like to get your advice from a title perspective on XYZ. It's a big part of our business. If you ask real estate agents, I want to be able to call an attorney. I want to be able to get my processor on immediately. Things happen, questions happen. So does that stuff ever get eliminated? I don't know. I don't think so. So there will always be a role of some kind. Will it change? Yeah, it will because of AI. I think we'll.
I remember when just to make this last point, I remember when I don't remember, but I remember people talking about when, because this was a long time ago, even before you were born, Marcus, if you can believe it. They used to have what they call exclusive listings, where basically, let's say for example, you're a buyer and you want to buy a house and you're working with an agent from Keller Williams, right? My brokerage. And you see a house, this was years and years ago, back in the 80s. And you see a house listed on the market, you drive by a house that's listed with Long and Foster, right? If they're still around. And you say, hey, Dan, can you show me that house from Long and Foster? I wouldn't be able to show you that house because it wasn't our listing. And so a lot of agents used to hold that as their security blanket. And then once we came up with co-brokerage, where, all right, I'm with Keller Williams and I can work with Long and Foster if Long and Foster is still in business. then yeah, I'll show you that house from Long and Foster because we have now co-brokerage. And in addition to that, we had the MLS where all the properties were uploaded on MLS. And a lot of people thought that was going to be the destruction of real estate. Yeah. And it actually ended up being a good thing, and it became an explosion of real estate where now everybody has access to all these properties. Same thing happened with Zillow, where they were like, oh, all the properties going on Zillow, it's the destruction of real estate. And that actually made it better because it's still like, yo, you can see a property on Zillow, but you still need to talk to your agent about if that house is a good fit for you.
Yeah. Mm-hmm. Yep.
And so to your point, I think you're right. Everybody makes a big kerfuffle, and then all of a sudden it turns out not to be a thing.
Yeah.
Okay, what?
Kerfuffle, are we betting?
No, I've heard it. I've heard of it before.
I actually like that word, kerfuffle.
I don't know that you're saying it right, but
I am. But we won't bet on that because we gotta let Latnae go. Where can they find you at, Latnae?
Closeatallied.com is our website. We're doing some new things real quick. Like first, I love your studio here. Love what you guys are doing.
Thanks, bro.
Great energy. We're actually creating a little production studio in all of our offices. So after you're done with a closing, you can come in and talk about your experience. And so it becomes like a gift to our buyers and sellers where they get a keepsake, or it also becomes a testimonial for our real estate agents. And so we created a separate entity called Panderbird Creative. So panderbirdcreative.com. And love what you're doing. I'm learning some stuff. I saw all these cameras. Are you going to edit this video yourself?
Yeah, me and my wife. It's just us.
Yeah, I don't know how to do that, but that's impressive. That's
my wife does. She does all the stuff, man.
But no, I mean, look, I think the no-brainer in any industry you're in is video, and you guys are at the forefront of it. So that's something we're seeing in real estate. All these agents want to do it, some don't know how. So we've got some smart videographers that we've brought in.
Nice.
And we're starting to do that too. So really appreciate what you're doing. And
really good.
We try to have some fun. We do a daily post on social media. Title's boring. We try to make it fun. So we're not going to talk to you about boring title issues, but
Yeah. You guys got Kim now too, right?
Who?
Kim. Yeah. Kim's my homegirl, man. She's cool.
Kim Lawrence? Kim stepping up? Which one?
Kim. I don't know anybody's last name.
Attorney?
Yeah,
okay.
she's an attorney.
Yeah. She just joined with us. She's awesome.
Yeah, she's a beast, man.
Yep.
Awesome, man. Well, thank you very much, Latnae, for coming through, man.
Hey, man,
we really appreciate it.
Brother.
You are a lot taller than I thought you were, but a lot shorter than you actually are. So I appreciate that, fellow short man here. Where can they find you at, Marcus?
At Mortgage Coach Marcus and at Fields Mortgage Group.
Awesome. And I'm Dan at Dan Wheeler Sells Homes. That's my email. But my Instagram is Dan Wheeler Sells Homes on all platforms. For all of us here at the Real Estate Wire, thank you so much. We are out.
Appreciate you guys, man.
Thanks, bro.
Really good.
Yeah, that was solid, brother.
Good, man.